Where Flint comes to talk about it. Super Talk 1570.
And once again, good morning, ladies and gentlemen, and welcome back to the program. Delighted to have in our studio this morning Margie Shard, certified financial planner, with her book, Financial Planning Exposed. And we told you just in the last segment here how you can gather one of these books or get one of these books. This is really a bunch of good advice in here, Margie. This is really good stuff.
Thank you, Lou.
You did tell the ladies and gentlemen in the last break where they can get it. Let's tell them one more time.
If you go to shardfinancial.com, so it's SHARD financial.com, you can click on my book link and it'll take you to where you can buy it right on Amazon.
Okay, good deal. It's a good book, ladies and gentlemen. I firmly recommend it. I asked us some questions. One question I had in the back of my mind this morning before you came in, and that is, we all have a limited income. I'll put it to you that. We all have a limited income. And we all have pretty much sometimes unlimited expenses. Those two don't go hand in hand. If perhaps, let's say, theoretically, you make $2,000 a month, and theoretically let's say your bills come in to be $1,000 a month, is there a certain level, a certain difference between those two that is acceptable? I mean, is that acceptable? Make two, spend one. Is there that buffer in there that's a kind of question mark? Is that the right percentage that you should be keeping for your future?
I think one of the important things that you're touching upon is, and I talk about this a lot with clients, you have to have a happy medium between saving and saving so that down the road in the future you have a retirement, and also being able to live while you're alive. And that's where those short-term goals, it might be vacations that people want to save for and take, or maybe it's hobbies, that they want to go do that they haven't been able to do. So I think you've got to have a happy medium. Typically, we like to see at least 10% going to your retirement accounts through work. And if you can max out, that's always a good thing because you get that tax deduction. So that can really drastically reduce your tax bracket and the money that's going to Uncle Sam. And I really don't like Uncle Sam. I don't know about you, Lou, but he's not my friend. But so, and then, so the surplus, the more that you can save, the quicker you're going to be able to do some of those things that you want to do in your life. So, typically we want to see money going into savings accounts as well as retirement. So, 10% retirement, and then also building up that emergency savings and that money that maybe you can access down the road for a down payment on a house, or, again, that vacation that maybe you've always, like I want to go to Bora Bora, so I'm going to need to save for that.
I don't even know where Bora Bora is. So
it looks fantastic.
Oh, is it really? You've been looking at brochures again?
You get to like live in this little tiki hut over the water, so who doesn't want that?
I mean, nobody in their right mind would refuse that. I mean, good gracious, a tiki hut over Bora Bora. It's getting better than that. Let me ask you another question here real quick. Oh, one more thing before I ask you. The question is, ladies and gentlemen, if you have a question for Margie, you can call this morning. 251-1570 is our phone number, 251-1570. If you have a question about your financial situation, whether it's a very broad question or a very specific question, to give her a call. She'll be glad to take care of it for you today. I was wondering, and this we started doing, and I think you're going to tell me this is a great thing to do, but we just started this at home about 2 weeks ago. And that is kind of a daily accounting. All right? I come home, and my wife says to me, well, what did you buy today?
Ouch.
What did you, and I say, well, I got gas. And here's the $20 gas receipt. Anything else? Well, yeah, whatever it might happen to be, And she writes it all down. And then at the end of the week, she tells me how much I spent. And it was a huge eye-opener. The first week, she said, you spent $1,200 last week. Oh, you're kidding me. I didn't even know I had $1,200. And that was a great eye-opener. Do you recommend this? Is this a good procedure?
I think that's great, especially, one of the biggest transitions people make is going from working to retirement. And so getting a really good grip on what you're spending, how, when, where, is good, because once you're retired, you're on that fixed income. And so it's a good idea to start doing that well before retirement. But one of the things, I tell my clients often when they're either trying to get out of debt or maybe we've done a cash flow scenario where we've looked at how much money's coming in and what their expenses are, and then there's this massive surplus. I mean, we've had people that have $20, $30, $40, $80,000 surplus on their budget sheet. And we're saying to them, where's this going? And they really have no idea. So one of the things that we tell clients is, take an envelope and for, every week, give yourself so much money and put that money in cash. And then put the receipt for if you buy a pack of gum, it doesn't matter how small it is, put that receipt in there. And if you get to the end of the week, and typically we tell people, put your money in on Monday, and that way you don't spend it all over the weekend. But if you get if you're in the middle of the week and you run out of money before you've ran out a week, then you know that, okay, you've got some spending issues and you've got to look back. But one of the things it also does is I'm assuming, Lou, became a lot more aware of what you were spending and when you went to purchase something, you probably took a step back and said, okay, do I really need that? And so that's something that, the daily thing I think is great. But I know with people's busy lives, they don't always have time to do that. So, that weekly checkpoint can be a good thing as well.
A want becomes a need sometimes with people. And, you get these brochures in the Sunday paper, the stores having this sale, and you open them up and you say, oh, man, I sure do want that coat. Or whatever. And the want becomes a need. I would say don't even look at those things because you can't even tempt yourself that way to start thinking about it.
One of the important things that people really need to have in their budget is, and they don't think about this, they think about the consumer's bill they have to pay. They think about the car payment, the house payment. They don't think about how much are you spending on clothing? What are you going to spend on? What do you want to be your vacation budget? What do you want to be your hobby budget? What's your entertainment budget? So going out to eat, bowling, movies, whatever it may be. And you need to include that.
All right, we will. Ladies and gentlemen, in our studio this morning, Margie Shard, Certified Financial Planner. Margie, thanks a lot for joining us.
Thanks so much, Lou.
My pleasure. Come back, will you?
I sure will, Lou. Thanks.